Greetings, tax tip lovers, and welcome to this week's top property tax tactics in just 5 minutes. Come gather around, people, and let me share with you how you might use another government sponsored HMRC approved structure to help you keep your assets in your name under your control, but legally avoid inheritance tax on them. Here's the story of Sally, who's 73 and wants to retain her wealth during her lifetime just in case anything changes and she needs the money. Sure, she could afford to make sizable gifts to any or even all of her children and grandchildren, but she just plain didn't want to. When Sally's husband, Bob, passed away, she'd inherited his investment savings account ISA portfolio, which, together with her own, was worth more than £2 million. Sally knew that while the ISA provides valuable tax benefits during her lifetime, along with the rest of her estate, the ISAs are all subject to inheritance tax when she dies. After a lifetime of hard work, she and Bob had built up a sizable property portfolio, and Sally knew that when she dies, her family faced an IHT bill of £800,000 just on the ISAs alone, and sorting that quickly rose to the top of her to-do list. After Bob's passing, Sally said she'd been disappointed at the old advisory team and decided on a fresh start. Well, through disappointment, you gain clarity, which in turn presents opportunity, and that's what's happened here. Sally used government legislation and HMRC approved structures to solve the tax problem. As always, we focused exclusively on the tax planning, while Sally worked closely with her financial advisor to fully understand all of the risks. Well, nothing to hide here, so let's get on with how it can work. Sally simply transferred some of her existing ISA portfolio into one that's invested in business property relief BPR qualifying shares, and she was able to retain her ISA tax benefits as well as keep control of her money. After Sally had held her new ISA for 2 years, it was zero rated for death duties, so Sally saved her family £400,000 in IHT. And here's the thing. 5 years ago, the government itself provided the answer to what Sally could do with Bob's ISA to save IHT on that as well. I've added the link above just in case it's useful. Since April 2015, surviving spouses of ISA investors have been able to make additional ISA subscriptions by being given a one-off incremental ISA allowance equivalent to the value of their spouse's ISA when they died. Sally used the additional permitted subscription to invest most of Bob's ISA into one that invested in BPR qualifying shares. By doing that, Sally saved her family a further £400,000 in IHT. That's a total tax saving of £800,000 in one simple, legal, and legitimate piece of tax planning. So Sally achieved her number one priority, which was that her investment stayed in her name during her lifetime, and she stayed in control, and her family paid zero inheritance tax on them. Which means that if Sally's circumstances do change and she needs some of her money, for example, for care home fees, she can make a withdrawal subject, of course, to liquidity being available. By contrast, once the gift is made, there can't be any reservation of benefit, which means it can't be accessed later. Sure, there are risks and plenty of them, and you need to understand all of them if you consider this type of planning. Well, that was Sally's story, the choice Sally made, and it's not right for everyone. I'm not saying you should do it, but it might be an option to consider, and you might want to discuss it with your usual advisor. And hey, if that conversation doesn't go well, then do get in touch. For those of you who don't already know, we list on our website at rethink.tax all the tax planning structures we use. They're there for everyone to see. That's clients, prospective clients, and the tax authority, and all of them legislated for. Not all firms do that. Go figure. If it is time to take action to sort your property tax planning, then here's how. You can do nothing and stay in the exact same place and pay a shed load of tax unnecessarily, or you can follow the link above for a free Power Hour review with property tax experts who are ex PwC and ex HMRC and will make your property tax planning like it was our own. Okay, that's it. Keep calm and jingle all the way. Catch you again for breakfast next week. Ta